All right, welcome into Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy, and this is the last time we're going to get together today, unless, well, not unless, you will stick around for the Cow Guy close. 1 Central, 2 Eastern. We've got a great show again today, the great subjects, lots going on. The chairman of the Fed on the Hill today testifying in front of Congress, so lots to talk about. So that's 1 Central, 2 Eastern, and that's in about, 16 minutes from right now, so we want to see you there. But this is the last time we're going to get together for these prices, so why don't we get after it and show you what we've got going on. Let's take a look at what's going on in corn. Corn's down 2 cents, and that's the May contract. 6.35 is last there. July's down 1 3/4 to 6.23 3/4. So the corn board kind of suffering. 2.5 cents lower in the D's corn. That's the new crop. 5.67.5 is last there. Soybeans also having a little bit of a backup day here, giving back some of yesterday's gains. May's down 14 3/4 cents to 15.14 1/4. We've got July off 13.5 cents to 15.03 1/4. But you also kind of want to see what's going on with the soybeans and the Novi new crop. This is what we'll be hedging into. That's down 6 3/4 cents. That's 0.5%, and 13.72.5 is last in that price. If we move over to see what's going on in the Chicago wheat market, wheat in Chicago, that's a little bit better today, but we backed off of our initial gains. 2.5 cents higher now. 6.97 3/4 is last there. That's May. July's up 2.5 cents, is 7.06 even. So there you go. About 2.5 cents across the board when we talk about gains in Chicago wheat. Let's go over to Kansas City and look at the hard red wheat there. 1 1/4 cent gain across the board. 7.99 is the price in May. 7.93 is the price in July. Everything's up 1 1/4 cents the front 4 months. So there you go. Spring wheat in Minneapolis. What do we have happening in Minneapolis? It's down today, 7 cents lower. And that May contract, 8.55 3/4 is last. 7 1/4 cents lower in the July. 8.52 1/4 is last there. And then finally, let's take a look at cotton. Everybody likes cotton, right? 202 points lower in the May contract there to 82.69. Only 8 points off the low. Ouch. 171 points lower in the Dees. That's 83.43, and that's only about, 13, 14 points off the lows there. Let's bring in our next guest analyst. It's Ted Seifried, Zaner Ag Hedge. Ted, thanks for being on the show. Well, what do you got for us? I mean, what's out there? Anything? Any good nuggets of information?
Well, Scott, we got a USDA WASDE report tomorrow, which this is not a report that we all really look very closely at because, really we're looking to the end of the month when we get prospective plantings. But the things that are going to come on this report, we're going to look at South America. In particular, we're going to look at Argentina. And you look at the average trade guesses, and they have Argentina's both their corn and soybean production coming down pretty dramatically, but maybe not as dramatically as what the trade has been talking about. So it should be interesting to see what the USDA has to say about that and how we digest that. In the meantime, the big mover today is soybeans. Soybeans, like you said, giving back yesterday's gains and then some a little bit. And it's really being led by the products. Sometimes you'll have days where the soybeans are the big movers and the products just kind of follow along. Now, this is more the products. Soybean oil under a lot of pressure, as is crude oil, by the way. But part of that is because, they're really not getting any bids in the Ukraine for sunflower oil. We were really worried about it last week when we were talking about Russia not re-upping the grain corridor. And then also Malaysian palm oil had been sharply higher last week because of flooding and weather issues, but that's really subsided as well. So a lot of the strength in soybeans from last week coming from soybean oil, that's kind of fading here today. And then even meal after 2 days of new highs is really kind of reversed lower. So it'll be interesting to see where soybeans go. Chinese crush margins aren't all that great. You look at what's going on down in Brazil for the basis of the ports. It's not terribly strong, suggesting there's not a whole lot of demand coming in on a daily basis. You start to feel, Scott, maybe soybeans are a little bit overpriced here, even given all the Argentinian weather issues. So I don't know. Should be interesting to see what the report says tomorrow, and then see how we react to it.
Yeah.
Corn just kind of trying to follow wheat, trying to hold it together. We bounced off key support. Now we're just kind of sitting here in wheat, trying to scratch out a positive day.
Yeah. No kidding. All right. That's great content. Super stuff. Thank you very much. Stay right there. We got to go away. We got to pay some bills. We're going to come back and talk more. But Ted Seifried from Zaner Ag Hedge. He's in Chicago. We'll be right back. All right. Let's take a look at live cattle. Let's take a look. That's proteins, meats, livestock, whatever you want to call them. Let's take a look and see how they're doing today. They're a little lower. April's down 27 cents to 165.82. We've got June down 40 cents to 160.60. You have to go all the way out to Dees to find anything in the deferreds that's going to be a positive, and that's a 12-cent rally in that December contract, the 168.87. There you go. How about feeders? Well, feeders, are they the leaders? Ish kabibble would be the perfect answer to that. 7 cents higher in the April, 198.67. But we do have a 92-cent gain in the May to 204.17. And then finally, let's go to the lean hogs. What's lean hogs got for us today? Nothing really. It's April's up $1.10 though. I guess that's good, 84.57. But the deferreds are all between, say, a dime and 27 cents lower. May's down a dime to 92.95. Let's bring back in Ted Seifried, Zaner Ag Hedge. He's been waiting patiently in the wings. He's got tons to say about this riveting livestock market, said Mr. Sarcasm. What do you think here?
Well, first of all, Scott, when I think about cattle, I would like to call them yummy because that's what I think of that. I'm kind of surprised we didn't get to this in the grain segment, but hey, we're grilling the Fed, right? And Jerome Powell saying that, rates might have to go quite a bit higher than what the market is expecting. That's put a pretty significant amount of pressure on the equities markets today. Last I looked, you had the Dow down almost 600 points. So you worry what that means for demand. I mean, does that mean if we continue to raise rates, is that going to put into this very well advertised recession that never seems to start, apparently? So there's concerns about the demand side of the equation. And nowhere is that more evident than that hogs board that you were talking about, because, you've got April trying to reverse higher just based on, really more technical than anything else. But then the deferred months are under pressure because, again, there's a concern about what happens with the economy. Continue to raise rates as aggressively. So, it's a demand kind of day, I think, for the live cattle, the hogs.
Well, what's one thing for sure we're going to have a lot to talk about is that, that cattle issue kind of solves itself over the next 2 or 3 years. There's going to be a lot of words spent on that one. I appreciate you coming on, Ted Seifried, Zaner Ag Hedge. He's in Chicago.